Today, I'm walking in a random neighborhood here in San Rafael for you guys because I've heard a lot of people saying that this is not a nice area and the area is kind of like going downhill and deteriorating. I've only been here one time before, so I don't really have much to compare it to, but just in my first impression of being back here and just walking on the streets, everything seems pretty normal around here, guys. It looks just like a regular neighborhood. I haven't seen any homeless tents. I haven't seen any of those homeless RVs hanging on the side of the road, anything like that so far, but maybe we'll see something like that along the way. Last time I was here, the most I saw was like a few shady characters hanging around the 7-Eleven or something like that. It wasn't anything crazy. But anyhow, let's talk about how all the experts were wrong about their forecasts for the future of mortgage rates, because at the beginning of this year, I saw countless stories from different economists, different banks, different CEOs, even Lawrence Yun, the chief economist over at the National Association of Realtors, talking about how by the end of this year, we're going to see mortgage interest rates back down to 5.25%, okay? And obviously, that's becoming a huge joke. And you know what, guys? They were so wrong, because we literally just hit 7.5% for the 30-year mortgage rates right now. The way things are going with this economy, there's a chance that the Fed might actually raise rates even higher again. Inflation has not been going down as much as they want to see yet. And now that we have made it down to the 3% mark and went back up to 3.2%, we're seeing things go in the wrong direction. And that's not good news when it comes to a stop of the interest rate hikes. And this is obviously a huge curveball for everybody who predicted that interest rates are going to be back down to 5.5% or 5% by the end of this year for a 30-year mortgage. So now what's happening is in July, the retail sales report is showing that U.S. consumers are continuing to spend despite higher interest rates and inflation, which helps things continue to rise. Now, another thing that we're seeing happening is the Treasury yields continue to go up, and so do the mortgage rates along with it. See, I told you the electric leaf blower is still annoying. It might not be quite as loud as the gas one, but they're still annoying. So obviously these mortgage rates that are continuing to go up is bad news for potential home buyers, because all this does for you is it makes your potential home purchase more expensive and even more of a deterrent for buyers to stay out of the market right now. And to me, probably one of the smartest and safest things to do, given the volatility and kind of the uncertainty of where things are going to go from here. Clearly, you can't trust the experts. I mean, I predicted that interest rates were going to remain around 7%, maybe even closer to 8% by the end of the year. It's already 7.5%. I mean, I'm probably going to be more right than the experts were, but I'm not here to pat myself on the back. I'm just telling you guys, the experts are out there trying to tell people what they want to hear, you know? Most people want to see interest rates come back down, and they thought it was going to come back down basically in a flash, and that this wasn't going to last, but that's turning out to not be true. So now what people should be asking themselves, are mortgage rates actually going to continue going up? Because so far it looks like they are, guys. The trends are not going in the direction that all these experts and economists predicted it was going to be. Right now, with this supposedly strong economy, or stronger than predicted economy, then the Fed is going to probably continue with their interest rate hikes, and at the very least, even if they don't, probably keep them where they're at right now. And let's not forget that the Fed is still actively trying to reduce their balance sheet and get rid of more of these mortgage-backed securities that they promised they were going to liquidate as well, which is having an impact on this. But there's still some economists that are predicting that by the end of this year, we're going to see mortgage rates hit 6%. And I'm not going to come out and say that that's impossible, because nothing's impossible. But just given the trajectory that we're on, that we're already looking at September, and we're at 7.5% rates, I think that is a very unlikely outcome, but anything's possible. And this also kind of leads me right into the next thing I want to mention, guys, is I've been really hammering home the big lie that's happening throughout the entire real estate industry right now, which is if you buy now, you can refinance later. And I'm not going to get into that a lot in this video, but we've been hearing these guys tell us that mortgage rates were going to be down by the end of this year, when in fact it looks like they're going nowhere but up right now. And for somebody that bought into that narrative back at the beginning of the year when interest rates were 7%, okay, or even if you got lucky in January or whatever and you got in when it was at 6.5, whatever it was, if you bought into that narrative that you're going to be able to refinance later and you're seeing interest rates go up, you're probably shaking in your boots right now thinking, am I ever going to be able to refinance? And the answer is, who knows? Because the reality is, whenever rates do start coming down, there's an extremely high likelihood that that event is going to coincide with home prices falling along with it. And if you don't have the equity to refinance when that day comes, you won't be able to. It's really that simple. And look at this, guys. Now that mortgage rates have actually officially hit 7.5% for a 30-year fixed rate, and keep in mind, that's for the most well-qualified borrowers. You're probably seeing people easily getting 8% rates, if not 8.5% rates right now, that don't have the best credit or don't have the best borrowing history. This is putting people in the position where they're now spending 43% of their income to afford a home. That is gross income. And I covered this in a video a few weeks back talking about how people are spending half of their income on the mortgage payment now, guys. And this is just continuing to go up with these interest rates continuing to go up because people aren't making more money. The interest rates just continue to go up. So the more that goes up, the bigger chunk of your monthly payment is now starting to go towards your mortgage. And with all of this happening at once, with home prices still being very high and having these 7.5% interest rates, what this means is housing affordability is actually worse right now than it was during the last housing market bubble. And we all know what happened back then, okay? Now I understand that the housing market didn't crash because homes were unaffordable. The housing market crashed because there was all sorts of delinquencies, the economy went south, and people couldn't pay their mortgages, okay? But we're looking at a similar situation coming up again now. And that's what I think everybody needs to start thinking about. Because affordability is not enough alone to tank the housing market unless we get a flood of inventory, which so far hasn't happened, just like we haven't seen a decrease in mortgage rates either. Because these high mortgage rates are also coinciding with low inventory because anybody who wants to sell is kind of trapped in their house right now, especially if they have a lower rate than what's being offered today, which is the vast majority of potential sellers out there. But we do know, according to a recent Zillow poll, you have a lot of sellers that are planning on listing their home for sale within the next 3 years. But I'm sure that's heavily dependent on interest rates, unless the economy keeps taking its turn for the worse, as it has been. Since I started my real estate career back during the last housing crash, I had the opportunity to sign up with different lenders to get foreclosure deals forwarded my way if they needed somebody to handle the deal, okay? If they needed somebody to come in and do a foreclosure and represent the bank side of things and put it on the market, I was on a list of available agents to do that. They must still have my email address because I just got an email a couple days ago, as you can see here. Look what it says. Default notices are on the rise in your county. Now obviously I'm in Miami-Dade County, that's where I live. You request to be notified new summer 2023 listing agent opportunities. 8 bank listings in your county. Register for 2 new asset managers that will be recruiting agents in your county. For agent priority, click the link below. Now, this could be fake. I'm not going to say that it's not, because there's so many different scam emails out there, and I didn't click on the link to find out if it is or not, because I'm smarter than that. But even without getting this email, I just covered a few days ago in depth in a video of 9 different signs that the economy and people are suffering right now and not able to afford to pay for things. And this is just another example of it, guys. And I want to thank Steve for sending me this story, which is that auto loan rejections are back to an all-time high. And I actually covered this story back when I was in Manhattan Beach, so I'm not going to spend too much time on this. But all I'm trying to say here is that when you're seeing stories like this, auto loan rejections, all-time high, auto loan delinquencies on the rise, foreclosure notices on the rise, mortgage delinquencies on the rise. I mean, what does that tell you, guys? This wasn't happening a couple years ago, so it means that things are starting to shift in the opposite direction, and things are not going to stay as good as they once were for very much longer. So when you start seeing all these headlines and all these things that are happening with the delinquencies and rejections going up, it's no wonder that we've seen the uptick in crime. You know, I covered this in depth in my video yesterday, showing you guys how much crime is up, how much retail theft is up, and people are getting desperate. And that's why we're starting to see all these thefts happening and crime is running rampant. And now you have China's Evergrande Group, which I'm sure you've probably heard about already, is a huge investment company over there that's going bankrupt. And if you don't think that's going to have an effect on things over here, I mean, that's just nonsense, guys, because China is literally the world's largest economy outside of the US, and they make everything for everywhere. So if China's in trouble and they start having financial issues, the rest of the world is going to follow. And I was waiting to see when this was going to happen, and lo and behold, it is happening. And that is that homelessness is starting to go up as well. In fact, homelessness is up 11% nationwide, supposedly due to evictions and the cost of living. And I want to thank DJ for sending me this story, because I kind of knew this was going to happen once the eviction moratoriums went back into play, and once inflation has started to, do its damage to the average household, guys. And this is really bad. First of all, let me just start off by saying that I don't think anybody should even be homeless in this country. I think that we have more than enough wealth that we could actually have a place to live for everybody, but that's a pipe dream, and it's never going to happen, because it turns out there's a lot of money in keeping people homeless, because there's a lot of corruption involved with this. They form all these programs and say they're going to spend money all on this and that, and ends up just padding the pockets of people that are looking to get rich off of all of this. And here's a perfect example of this, okay? You have King County over near Seattle, and they have received about $1 billion in federal funding for the Homeless Housing and Community Development Division, okay, since 2019. Yet the homeless rate went up by 14% in the last year. And you see this happening in all different cities across the country. You see it happening in LA, San Francisco, Seattle, Portland, New York, you name it, guys. It doesn't really matter where. But anywhere that they keep trying to throw a tremendous amount of money at the homeless issue, it just gets worse. But yet they just keep doing it. And that's how you know that there's a lot of corruption involved here, because if the money was actually going to where it's supposed to go, to actually get people off the street or build real houses for people that are on the streets, you would start seeing a noticeable improvement in the numbers. They wouldn't just be getting worse and worse by the day. And yet you still have people over there saying that, well, the homeless issue is still underfunded. Like, come on, guys. I mean, we already know this is a huge lie. Just like you can refinance later with the housing market. So I don't know why anybody still listens to these people that keep saying that we need more money to fight the homeless issue, when there's many different use cases across the country where the more money they throw at this problem, the worse it gets. And obviously the money's not going where it's supposed to go. Otherwise, it would be getting better. So to me, this is a huge red flag when you see people saying that they need more money. Because what the money doesn't solve are the root problems of the homeless issue. They're saying it's based on evictions and the higher cost of living, but let's face it, the vast majority of people that are homeless, especially here in California, have mental health issues, they have drug abuse problems, okay? They have criminal records, and people don't want to rent to people like that. Obviously, they're not going to be able to pay the rent, so that's part of the issue as well. These people face real mental issues that prevents them from having a place to live to begin with. They're saying that in New York and Boston, they've received a huge influx of immigrants searching for homes. So they're getting all of the illegals pouring into those areas. That's making more people homeless over there. And then in Phoenix, Arizona, you have the rising cost of living putting more people on the streets over there, because apparently there's different reasons of why all these people are going homeless in different areas across the country. And then in the Midwest and the Southeast, the main reason for homelessness increasing in these areas is the evictions, because of so many people that didn't pay rent during the pandemic that are now starting to get thrown out. But yet, our governments keep thinking it's a good idea to let in a bunch of people from who knows where, and, you know, bring them in illegally and ship them to places like New York and Boston, and just, it'll all be fine. It'll all work itself out. Well, we're starting to see that that's not the case. It's not working out well for anybody. And then, of course, you have people blaming the eviction moratoriums. Like, what do you want? You want landlords to keep absorbing the cost of someone else's housing indefinitely until people get their life together? That's not fair either, guys. I know nobody wants to see people get evicted and end up on the street, but it comes to a point where the games are over. You know, there are no more eviction moratoriums. You know, that was all temporary because of this extraordinary situation that we're all facing. But now that all this is over with, it's time to get back to reality. And I think a lot of these people that are being evicted thought that reality was never going to come again. Now, this house here is actually not a house, but rather a multi-family building, and I couldn't actually find what unit was for lease here and for how much, but I did find the property records, and the current company that owns it bought it back in 2010 for $1.8 million. Today, the estimated value is $3.3 million, so they're doing pretty good. However, here's the interesting part. This property has actually gone down by quite a bit in value in just the past year. Check this out, guys. According to this estimate, the property value is estimated to be down by about 27% year over year, and that's just in 1 year. So if residential's not crashing, you can rest assured that multifamily and commercial real estate is definitely on the crash side of things right now. Nice to meet you too.
Yeah,
What's your name, man?
John.
John?
Yeah.
You live around here?
You know, I just moved here actually. I sold my company about a year ago, and I just moved to the area, and I've been following your stuff because I believe the same things you believe.
Thanks.
Yeah.
I appreciate that.
Yeah, it's interesting. It's definitely a wild time in the market because it's like there's no price discovery at the higher level.
Yeah.
So right now you've got all the Zillow stuff that, you know, everyone's just benchmarking the people that are moving down from like 1 million down to 800 or 700 and be like, prices are going up. But then if you look at the top level market, anything over 1, you know, you're seeing major price drops, like 20%.
You're talking about in this area, right? Yeah, I noticed that as well. I've been watching different markets around here, San Rafael, everybody says I say it wrong. Novato, different places, like things are down like 4 or 5% already year over year.
It's wild. We were just checking out houses in Oakland, and they had one that was about 3 million last year, and it sold for 1.8.
Wow.
And so you're seeing that because the whole thing is the upper end of the market, it requires liquidity events.
Yeah.
So all those IPOs that happen, you had all the employees with millions of dollars doing the cash offers. And then if the bankers aren't getting their bonuses and the tech employees aren't getting their IPOs, then the entire top level of the market just falls out.
Plus you've had all the layoffs in tech as well.
Yep.
Yeah.
It's wild to see it. So, you know, who knows when the bottom hits in the market, but I don't think we've seen the end of it yet.
Definitely not. Definitely not. I think we're just getting started, you know? Everybody keeps saying, oh, it's bottomed, it's going to go up, it's going to go up. Well, I just saw Redfin's most recent report. Median home prices are falling again across the board, you know, as of July. So it's just like one of those things that people think it's over and it's just not. You know, this is going to take a very long time for it to be over.
It's so wild too because if you look at the incentive structures of Redfin and Zillow, their incentive structures to sell brokers, right? So they want to make sure that they're showing the highest value, so then you want to list and post your house on Zillow, or you want to post your house on Redfin. So it's funny, if you look at the Zestimates, they're all like going up and to the right, and then as soon as it lists like 300,000 down, then all of a sudden magically the Zestimate just updates perfectly right on to the list price. And I'm like, huh, okay.
Yeah.
So, you know, it's just one of those things I've always learned in business is like follow the money.
Absolutely.
So if you follow the incentive structure of how people make money, it's pretty clear to see where the biases lie.
That's right.
Yeah.
Smart dude.
Yeah, well, keep up the good work, man. It's awesome. I love seeing your stuff.
Hey, thanks, man. I appreciate it.
Yeah, of course. Enjoy the rest of the day.
All right, take care.
Yeah.
Well, that was cool. I always tell you guys, if you see me on the street and you recognize me, feel free to say hello. So nice meeting you, John. And I'm always love meeting my fans impromptu like this. So super cool. You see me out there filming, don't be afraid to say hello, but don't be afraid to be in the video. So like I was telling you, throwing more money at the problem doesn't seem to make a difference. The Seattle mayor, he's pitching to the citizens of Seattle another $970 million levy to voters to say that they will build new subsidized rental units and maintain existing affordable housing. When does it end, guys? Like, you keep hearing things like this. They promise a lot of this stuff, especially here in California, And people say yes because they're compassionate. They want to help these people. They don't want to see the homelessness anymore in their neighborhood. But yet it just gets worse. Like, oh, well, we couldn't build here because of X, Y, and Z. Or, oh, we couldn't get the materials for this. And so it ends up costing, 6 times more than we thought it was going to. It's always, oh, this or oh, that. And that's where the corruption comes in, because they want to pass these initiatives and then they get passed, and then probably 90% of that money ends up getting squandered. So that's the real issue here, and that's the thing that most people aren't looking at. And basically what's happening is Seattle is following the same footprint as San Francisco and LA, throwing more and more money at the homeless issue, and yet seeing the numbers go up exponentially year after year. And they're saying that it's going up faster than anywhere else in the country right now. I'm just tired of all the lies with everything, guys. I'm tired of the lies with real estate. I'm tired of the lies with the homeless situation. I'm tired of the lies of saying our money's gonna go towards this or that or everything else, and nothing ever gets done, nothing ever happens. Everything just seems to get worse, and it's getting old. So that's kind of like my rant on this, and I know that me talking about it here on YouTube probably isn't going to change a whole lot, but what it will do is it will make more of you guys aware of these issues and make you maybe change your mindset about it and realize that, hey, maybe this is not what they're saying is happening, and maybe I should stop voting for crap like this because it's not working. So I think it was a pretty successful walk around San Rafael, guys. Got to meet a fan of the channel, didn't see any riffraff, no crime happening, didn't see any homeless tents over here, which I'm kind of surprised. I thought maybe we would see some. You guys saw it for yourself. Maybe I walked in the wrong area of town. It looks pretty average around here. I know there's much nicer areas that I could have walked in where homes probably cost like 8 times what these do, but I chose to walk in this area that's really close to downtown, guys, and I didn't see anything weird going on over here. So if you enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.